Hello everyone, welcome to the market opening bell on Thursday, November 13th, your 10-minute guide to the stock market. The US government is expected to reopen soon, combined with weaker than expected ADP data, fueling expectations of Fed rate cuts, driving Hong Kong stocks higher. The Hang Seng Index opened 58 points higher, with gains expanding to breach the 27,000 mark at one point, up 319 points to a high of 27,016, its highest in over a month. It closed up 226 points or 0.8% at 26,922. The H-share index rose 77 points or 0.8% to 9,538. The Hang Seng Tech Index gained 9 points or 0.2% to 5,933. Total market turnover was 236.3 billion Hong Kong dollars. Southbound funds net bought $4.286 billion in Hong Kong stocks. Among them, net buys include Xiaomi at $1.592 billion, XPeng $770 million, PopMart $630 million, Xinu $411 million, GCL Tech $316 million, China Life $303 million, Tencent $157 million. Net sales include Alibaba at $3.434 billion, Hua Hong Semiconductor $984 million, SMIC $427 million, China Mobile $133 million. Statistically, Southbound funds have net bought Xiaomi for 11 consecutive days, totaling $8.136 billion, Xinu for 4 consecutive days, totaling $2.821 billion, PopMart for 3 consecutive days, totaling $1.454 billion. They have net sold Alibaba for 5 consecutive days, totaling $6.78 billion, Meituan for 4 consecutive days, totaling $461 million, SMIC for 3 consecutive days, totaling $1.082 billion, and Hua Hong Semiconductor for 3 consecutive days, totaling $1.526 billion. Technically, the Hang Seng Index briefly crossed 27,000 but failed to hold above it. This is normal, as breaking key psychological levels rarely happens in one go. It needs consolidation first, with support at 26,500. Mainland A shares opened lower and saw losses widen. The Shanghai Composite lost and regained 4,000, closing at 4,000, down 2 points or 0.07%. The Shenzhen Component closed at 13,240, down 48 points or 0.4%. The Chinex closed at 3,122, down 12 points or 0.4%. Total turnover in Shanghai and Shenzhen was 1.9405 trillion yuan. The renminbi central parity rate against the US dollar was raised 33 points to 7.0833. Hong Kong EX announced an agreement with Swift Clear Settlement, operated under the HKMA and responsible for the Central Money Markets Unit (CMU), to invest up to 455 million Hong Kong dollars in new shares, ultimately holding a 20% stake. This marks Hong Kong EX's first investment in an HKMA subsidiary, funded internally without affecting its dividend policy. SwiftClear handles settlement for bonds and fixed income products. The investment will enhance cooperation, improve CMU efficiency, attract more international investors to Hong Kong's bond market, and increase liquidity and depth. It also opens opportunity to expand cross-border settlement services and deepen market connectivity. This year, 87 new IPOs have listed on the Hong Kong stock market, raising over 240 billion Hong Kong dollars, ranking first globally. As of November 11th, 16 A-share companies have successfully listed in Hong Kong. Over 80 are in the pipeline, and several others, including Zhongyi Innolight, have announced plans to list but have not yet filed. Over 300 companies have submitted listing applications this year, a record high. The 2025 Shopping Festival quietly concluded without standout highlights. Running from October 7th to November 11th, the longest promotional period ever, 35 days. Total GMV reached 1.695 trillion yuan, up around 26.6% year-over-year, a significant recovery from 2024's 1.44 trillion yuan. This was driven by government trade-in subsidies, boosting home appliance sales over 137.7 billion yuan. AI applications and the rise of instant retail. Live streaming e-commerce was a standout, contributing over 332.5 billion yuan in GMV, up 54.6%. However, platforms avoided disclosing total GMV, instead highlighting order growth, brand performance, and user engagement, reflecting both consumption upgrading and regulatory pressures. Macau gaming stocks generally rose. Industry data shows gross gaming revenue for the first 9 days of November at 6.4 billion petakas, implying a daily average of 711 million. Encouraging, as November is a transitional month between October's Golden Week and December holidays. Full month gaming revenue is forecast at 20.5 to 21 billion petakas. Additionally, Macau's Statistics and Census Service reported Q3 2025 non-gaming visitors spending at 20.38 billion petakas, up 10.7% year-over-year, with overnight visitors spending 16.76 billion, up 7.6%, and same-day visitors spending 3.62 billion, up 27.6%. Earnings highlights. Tencent Music reported first 3 quarters revenue of 24.261 billion yuan, up 15.84% year-over-year. Net profit was 8.853 billion yuan, up 88.9%. Q3 alone revenue was 8.463 billion yuan, up 20.6%. Net profit was 2.153 billion yuan, up 36%. Online music services revenue grew 27.2% to 6.97 billion yuan, with subscription revenue up 17.2% to 4.5 billion yuan. ARPU rose from 10.8 yuan to 11.9 yuan. Overall, online music has become TME's core engine, with annualized subscription revenue exceeding 20 billion yuan, now around 60% of total, up from 50% last year, signaling successful shift to high-margin subscriptions. Samsonite reported Q3 net sales of $873 million, down 0.6% year-over-year, an improvement from Q2's 4.8% decline, driven by sustained global travel demand, strong new product launches, and marketing support. Net profit was $73.5 million, up 11%. Earnings per share was 5.3 US cents. Gross profit was $520 million, down 0.1%. Gross margin improved from 59.3% to 59.6% due to higher contribution from Xiaomi and DTC channels, plus supply chain optimization and pricing. Overall revenue slightly down, but margins improved. Management is cautiously optimistic for 2025, expecting flat full-year net sales, but 5 to 8% profit growth and gross margin above 57%. Focus will be new product innovation, channel expansion, example US geo listing, and marketing to boost brand premium. Sales growth expected to resume in 2026 with global travel recovery. Positioned as global luggage leader with around 20% market share and long-term growth potential. US stocks showed mixed performance. The Dow closed above 48,000 for the first time, up 326 points or 0.7% at 48,254, a new record. S&P 500 nearly flat with less than 0.1% at up less than 0.1% at 6,850. Nasdaq down 61 points or 0.3% at 23,406. The Nasdaq Golden Dragon China Index, tracking Chinese ADRs, fell 120 points or 1.5% to 8,112. Financials performed well, with Goldman Sachs, JP Morgan, and American Express hitting all-time highs, lifting the Dow. Citigroup, Wells Fargo, and Bank of America also gained, pushing financial ETFs up around 1%. AI stocks remained volatile, reflecting valuation concerns. Oracle and Palantir both fell over 3%. AMD surged 9%, Nvidia up 0.3%. Our stock pick today is Midea Group 30000333. Midea Group's business covers smart home, new energy and industrial technology, intelligent building technology, robotics and automation, health and medical, smart logistics, etc., and has established a business matrix with equal emphasis on 2C and 2B development. It can provide consumers with various smart home products and services, and also provide enterprise customers with diversified commercial and industrial solutions. Among them, Midea's smart home business mainly covers smart appliances, smart home and surrounding related industries and ecological chains, focusing on building intelligent scenarios for end users, user operations and data value exploration, and is committed to providing end users with the best experience of whole house smart home and services. Midea's new energy and industrial technology business takes technology as the core driving force, focusing on new energy business as well as core components in the fields of HVAC, appliances, new energy vehicles, robots, etc., owning multiple brands such as Meiji, Welling, Mayren, Hyconics, Clue, Gaochuang, etc., with products covering compressors, motors, chips, valves, pumps, new energy vehicle components, robot components, photovoltaics, energy storage, and other products. Midea's intelligent building technology business mainly involves building products, services, and related industries, with iBuilding Midea Building Digital Service Platform as the core, covering HVAC, elevators, energy, building control, etc., with products including multi-split units, large chillers, unit machines, computer room air conditioning, escalators, straight elevators, freight elevators, etc., as well as building automation software and building weak current integration solutions. Midea's robotics and automation business mainly focuses on future factory-related fields, providing solutions including industrial robots, logistics automation systems and transmission systems, as well as related solutions for medical, entertainment, and new consumption fields. Midea's medical business includes Wandong Medical, which is committed to medical imaging technology innovation in the health and medical field and provides high-quality medical imaging products and services for clinical use. Ande Jilian in the smart logistics field continues to provide customers with end-to-end digital intelligent supply chain solutions. In the first 3 quarters of this year, the group achieved operating income of 363.057 billion yuan, a year-on-year increase of 13.82%. Net profit attributable to shareholders was 37.883 billion yuan, an increase of 19.51%, mainly benefiting from the rapid growth of businesses such as new energy and industrial technology, intelligent building technology, robotics and automation, among which the new energy and industrial technology sector revenue increased by 21%. The intelligent building technology sector increased by 25%, and the robotics and automation sector increased by 9%. Midea has laid out humanoid robot technology as a new industry laid out by the group. It has established a humanoid robot innovation center combining Midea's diversified industrial operation advantages and mainly focusing on 3 aspects. First, the research, development, and application of robot core components. Second, the robotization of home appliances, integrating robot and AI technology into home appliance products, such as visual recognition, robotic arm application, and human-machine interaction technology. Third, focusing on the development of robot complete machines, deeply exploring application scenarios, and actively laying out core technologies. In the future, it will accelerate the application of humanoid robots in industrial and commercial scenarios, create solutions for industrial and commercial scenarios, and target industrial scenario applications. Suggested buy price HK $87.5, target HK $96.5, stop loss HK $83. Since the A share price is discounted compared to the H share, buying its A share 000333 is another option. Suggested buy price 78 yuan, target 85 yuan, stop loss 74 yuan. I do not hold the above stock.